Should we hit him with a little chant?
Yeah, I'm ready whenever you are.
Yeah, let's do it.
5 Friday feedback. 5 Friday feedback. 5 Friday feedback.
Oh man, that does not get old.
Favorite time of the week.
Favorite time of the week. I might just start rehearsing that in the mornings, like a Monday morning. Just it's early. Just 5 Friday feedback. Just get me into the zone.
We're here. We made
here.
it. We made it to Friday. That was always one of my favorite days.
Happy Friday.
Yeah, happy Friday.
Happy Friday. My goodness. Oh,
beautiful day here in Arizona. Mm-hmm. Can't complain too much.
Nope, can't complain. Can you guess the weather? I bet you can't. Even I don't know the weather. What do you think? It's probably like 72 out there.
Yeah, I think it's like 68. But yeah, it's really nice today.
Dude, it is nice. Let me get.
You don't live in Arizona for the summertime. You probably have 5 or 6 months of just straight not good. But then the remaining is really good. But remember, because it's the morning. Yeah, so like it was good.
Yeah, not bad.
It's nice outside.
Not terrible. Not horrible. As my dad would say, it's not horrible.
What's tomorrow going to be like?
83 is the high, 54 is the low.
Cool.
Not bad. Not bad.
Yeah. You don't live here you live here for this time of the year. During the summers when it's like 120 every day. Remember, this year was particularly bad in that we had, I think it was like the first time or the longest triple digit or like.
Yeah, it was triple digit. Like it didn't break triple digits for like
3 months. But there was like a time that was like over 115 like consecutively for so many days. Oh, bad.
It's funny. I don't mind it.
You don't mind? I don't like heat.
I love the heat.
I prefer cold.
I love the heat. I get in the sauna and I'm just like, wish we could turn this up more.
See, my big thing is like during the summer, so I think people around my neighborhood think that I'm crazy because I wake up super early every morning and I go out for my runs and my walks and everything. And I listen to my podcast and I have my dogs with me. Mm-hmm. So I think they just see me. Like this guy is like, this guy doesn't work. He's like literally walking around the neighborhood all the time.
4 a.m.
Yeah. 4 a.m. in the dark.
Yeah, in the dark.
Creeping around the houses.
Creeping around, looking at a dog. Yeah.
But during the summertime, I wear my sweater and my sweatpants. But during the wintertime, I wear my shorts and my tank top. And the reason I do that is in order to just suffer more.
Yeah, Chris likes to suffer. I can't blame you for that. Mm-hmm. I think that's where we like connect. The same thing. It's like there's greatness in the suffering.
Well, I think my life is just so easy. Like, I mean, honestly, like I've just created such a nice, consistent life that without having that struggle, then they're going to strive for something to struggle. And unfortunately, I find a lot of people who have no purpose or no struggle, they end up getting into politics, or they're getting into something that doesn't really matter. And now they're
getting into politics.
And now they're screaming at the TV, or they're fighting with somebody on Twitter about something that like they really have no control over. So for me, it's rather like I'd rather fight myself, try to make myself better. If I want to fight somebody, I go to jiu-jitsu and like try not to die.
Dude, that's awesome. That's awesome. Yeah, Chris,
or go into the cold plunge.
Go to the cold plunge. Yep. God, I'm excited for that cold plunge. I'm still excited for it. I want to see how cold it is in comparison to like the one at my gym. Because like the one at the gym, when there's like multiple people coming in and out of it, a lot of people, what they'll do is they'll go from like, they'll do like 15 minutes in the sauna at 170, 175. They'll go into the cold plunge, and then they'll go like 3 minutes or longer, and then they'll go into the hot tub. And then they'll come back into the
cold plunge. As long as you finish with the cold plunge, that's the way to go.
Yeah.
Well, I was listening to Dr. Peter Tia, and he was talking about that like there's a certain level that below a certain temperature, it doesn't matter anymore. Yeah. So what he was saying, I think I have to go back, so don't quote me on this. I think it's 43 degrees. Okay. So like at 43, so there's no difference between like 43 degrees and 32 degrees. But people like try to get to the 32 degrees where it's 32 is where water freezes. Yeah. Just to be able to say that like I did it, but there's no actual health benefits below 43. No. With the exception of just being like able to flex on people and be like, I did 32.
Yeah, exactly. It's like, sure, like the cold shock proteins, good for the liver, brown fats, all that stuff. But it's like, it's kind of an ego thing too. There's a little bit of ego. You've got to, not to like pump your ego up. It's like to tame your ego down. Mm-hmm. That's what I think people don't get. It's like to remind yourself, it's like, oh, you think you're a bad dude? Like a bad motherfucker. Well, I'm going to show you that this cold water thinks otherwise.
Yeah, that's when you read Navy SEAL books, like they always talk about during Hell Week, the hardest part isn't the workout and everything. Yeah. It's just having to be cold and miserable constantly.
David Goggins said, he goes, a lot of dreams die in cold water.
No, 100%. And that's why I try to put myself in the cold and like try to deal with that. And then like I'm doing that, especially right now during the wintertime, it like really sucks. because I'm out there and I do that. And right now in the mornings it's like 52, which I know is not cold.
Yeah, okay, there's a difference between
it.
like forest 52, and Arizona 52.
Yeah.
It's so different.
Yeah, it's I know it's not that bad. Like, you're from Minnesota and you're listening, you're like, those guys have no idea what cold is. And I get it.
Yeah.
I get it, but when you're sitting inside of that cold water and you have to get out and then go and walk in like 52, like, I'm freezing and I'll like force my dogs to run so that I'm not gonna die
Go.
in the street.
Yeah, dude. Cold plunges they're fun. They're interesting.
Yeah. I say we get into it a little bit.
Let's get into it. I was trying to delay the taxes conversation for as long as I could, guys. Well, I got 5 minutes out of them, 5 minutes out of us, but
well, let's get into it. So this week on the pod, on Monday, we talked about everyone's favorite topic, as Dom just foreshadowed,
taxes.
Everyone loves taxes, and we talked a little bit about. I mean, I don't love taxes. I have to tell you that, but I do like little wins.
Yes.
Being able to get these small hacks, and that's what I feel that, from a financial independence realm, being able to optimize your taxes in order to keep more of the money that you make. Because again, it's not about how much money you make; it's about how much money you keep.
Absolutely.
So being able to control your tax rate and control what we can control through some creative ways of tax mitigation strategies.
Yeah.
And investing the money into
like the Roth, like we talked about, the traditional.
The traditional and different ways of doing that. It just makes it more. It gamifies it for me. Being like, instead of me paying an extra $5,000 to Uncle Sam, I paid it to my future self, and that's pretty darn cool.
Exactly. Yeah.
So
Grandpa Chris.
Yeah.
I was like, Uncle Chris wouldn't work. It's still the same person. Doesn't age as well. Grandpa Chris.
Yeah, I always like to think of a future me, and I always want future me to look back at past me and be like, good job, bro.
Good job.
Thanks for looking out.
Dude, that's good.
I think a lot of people, what they do is they're like YOLO, and then I hear this often from like from clients of mine, where they'll be like, well, why didn't you do this? And they're like, well, because I could have died tomorrow. It's like, okay, but statistically you're not going to die tomorrow. Yeah. Statistically you're going to get to retirement and have no money unless you start saving money. So how about we just work for what we think is best, live for today and tomorrow. You can have both. It doesn't have to be 100% of anything.
You don't have to burn your paycheck every time you get it.
No.
Yeah. It's like if you got like $100 every day, it's like you don't have to burn the $100 every day. There is tomorrow. Like there's stuff that is so expensive that you can't afford it all in one day, in one day's work. You got to save up for it. Like a house, a car, retirement.
Yeah, but I understand that thought because, again, I mean, I came from not a lot of money, and I definitely understand the plight of people who don't have money because I was there and just kind of feeling like if I don't use this money, someone's going to come and take it because you don't have the understanding of what money is. And it took me a long time of, work on myself to be able to get to the point of being comfortable with investing, because for the longest time I thought investing was gambling. All the things that I'm trying to teach our audience are things that I personally struggled with for years and years and years, thinking that it was the opposite. I thought the world was against me. I thought everything the exact same way. It wasn't until I realized that, this is all just a game. You just have to learn how to play the game.
Definitely.
That my life completely turned around.
Yeah. Just changing your mindset, changing that one thing. Makes the world of a difference.
Yeah, it's about what you focus on, right?
Absolutely.
So let's talk about taxes.
let's focus on taxes.
Yeah, that's what we're talking about, taxes. Yeah. It's all about life and taxes. What is it? The
only two things guaranteed in life is death and taxes.
Yep. So we're all going to get there one day.
Yep.
So the first thing we talked about in the pod was the purpose of taxes.
Yep.
And taxes fund government services and economic and social impact. Things are supposed to be quote unquote essential services.
Yeah, roads, police, fire, medical, stuff like that.
Yeah, and of course there can always be a discussion as to is government the best way, or is taxing people and using government the best way to give those essential services, and what actually constitute as essential versus non-essential. Here at the Fi Guys, we're more about controlling what you can control in your finances. So I'll let the politicians have that discustion.
Yeah, we could spend 10 hours just talking about politics, but we're not going to do that today. We're talking about a better subject.
Yeah, we're talking about taxes.
We're talking about taxes.
But remember, there are different types of taxes. So most people, they think about just federal taxes. But in addition to federal taxes, there's also state taxes. Yep. And every state's different on the way you tax. So say there's California, where they have some of the highest taxes, and then right next door there's Nevada with basically no taxes. Yeah. They have higher property taxes but no income tax, and same with Florida.
Interesting. I think in Texas too.
Yes, Texas as well, I believe. Then some provinces have local taxes as well, so you can get kind of tripled there. And then the final tax, which is a biggie, is FICA, which stands for what does FICA stand for?
Federal cut it, cut the pod,
cut the pod,
cut the pod, cut the pod,
cut the pod.
It's but it's paying into Social Security and Medicare.
Social Security and Medicare.
That's the purpose of the FICA tax.
Yeah, Federal Insurance Contribution Act. I just brain farted super hard, but that's
it's okay. It's okay.
Yeah, so it's Social Security and Medicare, and so
exactly
that current money that's being taken out of your paycheck. It's supposed to go into a pool to be able to pay for yourself, but really what's happening right now is it's paying for current retirees.
Yeah.
And our hope is that when we get to retirement and our age demographic, that the younger people will be paying for us, or the government's going to figure out what it needs to do and have enough money there.
Yeah, that'd be nice.
We'll figure it out.
Yeah, we'll figure it out.
That, you know what? That's future us problems.
Yeah, exactly.
Yeah, screw those people.
Screw those people. Yeah, that's... Yeah.
Yeah.
Grandpa Chris, Grandpa Dom.
Grandpa Chris got me wrong. We're gonna,
God bless you.
Good luck, guys. But that's why we control what we control, and we don't know if there's going to be Social Security. I personally think we will have Social Security when we're older, but I think it's going to be dramatically cut. I think by at least 60% of what you should get, you'll probably end up getting. But here at the Fi Guys, the way that I try to engage with our clients and with my clients at Mons on Wealth is by assuming that we will have no Social Security. And when you end up at the end of that line and you do have Social Security, great. That's just extra money that you can go and have fun with. But we focus on controlling what we can control. We can control on the habits, how much money you make, how much money you spend, how much money you're investing in the difference.
Absolutely. And whether Social Security is going to be there or not, that doesn't give you an excuse to be complacent about your financial future. Mm-hmm. You still have to take ownership, extreme ownership, some might say, and just prepare for tomorrow.
Yeah.
No one's coming to save you. You got to save yourself.
Yeah, and I think that's very important to remember that your retirement, your life, it's on you. It's not the government's job to make sure that you retire. I've had people tell me, "Well, I'm working at this job and they're not matching my 401k, so why should I save?" And I have to tell them, is it your job's job to make sure that you can retire one day, or is it your job?
Yeah.
I have to have those hard conversations. But remember, everyone needs to take extreme ownership of their life, because again, no one is coming to save you, but we're here to try to give you the best information so that you know what you're doing. And speaking of good information, I say we go into decoding the progressive tax system, because I know it can be very confusing.
A lot of people get it wrong.
Yeah.
All the time. They think that, if I have to pay 25% in tax or 37% in tax, everything is taxed at 37%.
Yeah, I've had people I mentioned in the last pod who's told me like, "Oh, Chris, I need to stop working for these last few months because it's going to put me into the next tax bracket, and it's going to end up costing me a lot more," because they thought that whatever they hit as their marginal tax bracket would be their effective tax bracket. But they're two very different things. Yeah. Marginal tax bracket is the highest tax bracket that you reach for your income. Yep. Marginal is the average of all the buckets that are being filled up. So I always like to use the bucket analogy. So imagine that you could really have 7 different buckets, but for purposes of our discussion, let's just do 4 buckets and say that someone had made $100,000 this year.
Okay.
So their first $11,000 will go into the first bucket and be taxed at 10%. That from $11,001 to $44,000 or $45,000 ish would be taxed at 12%.
So once the first bucket's filled up with water and you've paid all your taxes,
that
for the
bucket
10,000,
is full. You can't put any more inside of it. So you start filling up the next bucket.
So you go to the next bucket, and the next bucket or tax rate is 12%.
Yep. And
so from 11,000 at the end of the first bucket to the start of the next bucket, which is 44,000, that money is taxed at 12%.
Yep.
And so on and so forth.
And so on and so forth. And the next big jump, or the biggest jump actually in the tax brackets, goes from your 44 to your 95. And that's a jump from 12% to 22%.
Yeah, 44,000 to 95,000. Mm-hmm. Yeah.
Exactly. So you can kind of see that. But a lot of people unfortunately think like, "Oh no, I made $100,000, meaning my marginal tax bracket is 24%. I'm going to get taxed at 24% federally, state taxes, and FICA, the entire hullabaloo." But that's not the way it really works. Your actual taxes would be more like 17% federally.
Yep. Yeah. And I think if you guys have any questions on that, we can always explain it again in another video or another podcast.
Yeah.
Brush over it.
And we'll also be sure, go back to our Monday pod. You'll be able to see the tax bracket. We actually put on there a link to the IRS if you go into the description, so you can go inside there and see the tax bracket that we're looking at here.
We could probably drop it in this one too.
Okay, yeah, we'll put it inside this one too.
Put it in this one too.
That way you guys can see it and understand what we're looking at here.
It's just a tax bracket from the IRS.
Can we put on the TV back there? No, it's
Maybe.
okay. It's too much
Nah,
work.
yeah, it's not plugged in.
Yeah.
It's broken.
It's broken.
It's broken. It permanently says Fi Friday feedback. Unless it's Monday, it says Fi Guys podcast. It can't be changed, unfortunately.
The Google Chrome is really bad Google Chrome.
Yeah, the internet, the distance. Got a color guy.
Yeah, we were talking earlier about having to make
Plumbing, general contractor.
You need someone who's skilled because all we have are a bunch of geologists, but no one who actually knows how to do stuff.
Oh, yeah.
They recently had a South Park on that. It was really funny.
It was pretty good.
Yeah, because I got Paramount Plus and they have it on there, so I watched one of them, and it was so funny. They have all of the people that went to college, and they're like lawyers and
doctors.
No, not doctors.
Not doctors.
Doctors are good, but like lawyers, geologists, like people that like had to go for college, and they're hanging out outside of Home Depot trying to get work.
Yeah.
And then
really?
And then all of the laborers, they're rolling around like big because now people are paying them what they're worth.
Yeah.
It's pretty funny.
That sounds hilarious.
And then we talked a little bit about like why is our tax system so difficult? Why do we have a progressive tax system? And the real reason for it, and you can agree or disagree with it, is we're trying to ease the burden on lower income earners. Because remember, people under $45,000 really, their taxable liability on average is only like 11.6%, rather than if you go over that, it starts to dramatically increase to like 17, 18.
Because like in actuality, like it would be so much more simple just to be like
A flat tax.
35% flat tax on everyone. Everyone has the same, no deductions, whatever.
I don't know about 35%. That's high.
Well, yeah, that's high. But 25, whatever it would be. But if you're someone who only makes 15 grand or minimum wage or something like that, that's a lot of money.
Yeah.
That's a sizable portion versus someone who has enough money and it's like, oh yeah, I still have plenty to live on.
Yeah. And there's a bunch of tax loopholes and stuff like that, but I make enough money and I'd be fine actually paying more in taxes. But again, you play the game that's put in front of you. So
yeah, it's just the fee of the game. Yeah, it's you want to play in America, then that's what you got to do.
So then after that, we talked about strategies for reducing taxes, and I basically posed the question to you: if you could reduce your taxes right now and minimize your tax liability while increasing the amount you're saving for retirement, would you take that deal?
Yeah, it's a sweetheart deal.
Yeah, it is a sweetheart deal. And then there's also an inherent confusion in there, in that there's a difference between reducing your taxes while also building your wealth. It seems inherently,
because like if you make more money, well, I'm going to get taxed more, so it's kind of de-incentivizing yourself psychologically to not make more money. But there's ways
but you can actually make more money and save more money and pay less in taxes.
Now that's a sweetheart deal.
That's a sweetheart deal.
I like that.
That's what we talk about in the next segment, where you talked about different ways to put pre-tax money, like using your 401k, your 403b, IRAs, or HSAs, in order to take that money, put it into the pre-tax bucket, and then we're able to lower how much money we have to report to Uncle Sam, saying that we made this money, so the government is going to charge us less in terms of income. We use a person who made $100,000 this year, just got out of college, and we said that if they were to put $22,500 and basically max out their 401k, they would have lowered their taxable burden by $5,000 federally. Yeah. And the statewide would work as well. But the big thing that does not get affected, you can't avoid it all, is FICA. You can't avoid Social Security and Medicare tax. No matter what you do, you can't shelter that money. You still have to pay that tax as if it was $100,000, even if you only brought home a smaller amount because you put more money into the IRA.
And because that's just such an important tax.
Yeah, and honestly, you want to pay into that, because the hope is the way that Social Security is calculated for you, it's based off of your...
Isn't it like how much you
40 highest quarters. Yeah, how much your 40 highest quarters, which is your 10 highest grossing years. So is how much, whatever your 10 highest are in terms of how much money you paid in. That's what your Social Security benefits are based off of.
So question, could you work for just 10 years? Yep. And just and they were like really good years. Like you made, let's say, $100,000 each year.
Yep.
And then just like, oh, I've reached 5.
Yep.
Cut it off.
Yep.
Gotcha.
Yep.
That's, bro, life plan. Life plan. I'll see you at 35, Dom.
Yeah, but you can definitely do that. Again, it's just 10 years or 40 quarters of your highest income. But yeah, you could work for 10 years. At this point in my life, I'm eligible. I have all that I need for Social Security, and I went on there recently while doing the notes for this, and it said that I was eligible for like $26 or $2,400 a month.
Nice.
So
that's pretty good.
That's cool. I'm good.
I mean, that's livable. You know.
Yeah, but again, in the future, I'm basically assuming in my mind that I'm trying to achieve FI in my own control by having the assets in my own hand. But if I have that money when I get there, great. But I'm not putting that into the plan.
No. Like my dad says, he's like, that's just seed money.
Yep.
That's just seed money. Yeah, that's not bad. That's not bad. But and again, you can't access it at 35 or 45.
No.
It's what, like 67 now?
No,
it's not that.
It's 62, I think.
You can either get it early or you can get it a little bit later.
You can defer it till 72. I think you can turn on at 65, maybe. I can't remember exactly. I'm sorry.
That's a whole nother conversation.
Yeah, but the only way that I could access it is if I had to go on to disability or something like that. Then yes, I could access it.
Yeah.
Yeah, we talked about ways to control your tax rate by being able to use pre-tax accounts like your traditional IRA. A big one that I like to use is my HSA, my health savings account.
Yeah.
Or if you don't have an employer-sponsored plan, then you can always use an IRA, and anyone can open that as long as you have earned income. And then after that, we talked about the IRS recently released the 2024 updates for retirement contributions. So just to run through those. For employer-sponsored plan, your 401k, 403b, 457 TSP, it's actually been increased by $500 from $22,500 to $23,000. Catch-up provision, so people over the age of 50 can still contribute an additional $7,500. IRAs have also increased by $500, so instead of $6,500, they're now $7,000. Catch-up provisions for IRAs for those over 50 is still $1,000. And then for people to be eligible for Roth, for individuals, you have to be making less than $146,000, and then for married couples under $230,000.
Simple enough.
So but what that really means to us is that it gives us a bigger chance to be able to save more money.
Yeah.
Because as inflation goes up, we want to continue to save and save more and more. And I'm actually looking up right now what the HSA contribution limit is going to be for 2024 because
like the worst thing you would want to happen is to run out of money.
Yeah.
Or depend on a system that could run out of money.
Yeah, so they've actually raised the HSA as well. For 2023, it was $3,850. It's been raised actually pretty substantially to $4,150. Wow. So it's what, $300? No, $200. No, $300.
$4,100 is solid.
There's a $300 increase on that one.
Nice.
So that's really good.
HSAs are simple to set up.
Or
it goes through your work.
It could go through your work, but in order to be qualified for an HSA, you have to have a high deductible health plan. That's the only way you can qualify for an HSA.
Interesting.
And I usually recommend people for HSAs who often don't go to the doctor that often because you have a higher deductible now, so it could cost you more in the short term because you're paying a lot out of pocket. So if you're someone that goes to the doctor often, HSA might not be for you. And that's you should probably talk with your HR department if you do have that to figure out what's right for you there. And they often have resources to send you out to. They can look at who your doctors are, how many prescriptions you're on, and kind of run that analysis to say what's going to be best for you with PPO, HMO, or a high deductible plan with an HSA. I just like the HSA because I don't go to the doctor very often. And I like to use that triple tax advantage of the money that goes into it never gets taxed. It grows at no tax. And if I take it out, for qualified medical expenses, or when I reach the age of 59 and a half, I can take it out as if it was an IRA.
Interesting. Can you set up an HSA if you're self-employed?
You can, but you have to have a high deductible plan. So first you have to pay for the high deductible plan.
Okay. Well, that's something to think about.
Yeah, I had HSAs for a long time. I don't have an HSA anymore. I'm now on my wife's PPO through her work because I looked at how much it was going to cost me to run it through Monzon Wealth. And it was just cheaper to... Her employer pays for such a large amount, but you can't be covered by a PPO and have an HSA. So I couldn't be covered by my wife's plan and then try to get a high deductible plan in order to qualify the HSA. That's a tax no-no.
Okay. And for those who don't know, PPO?
It's just a preferred, I don't know what PPO stands for. But PPO is basically anything in-network you're able to go to without a referral.
Oh, okay.
HMO means that you have to stick within an even tighter network, but in order to go to a specialist, you have to get referred out from your primary care physician. So typically PPOs are the most expensive. HMOs are slightly less expensive, and then high deductible plans are the least expensive in terms of the fee that you have to pay for them, your monthly fee.
Yeah. Okay, interesting. Yeah, because for me, I'm 25. I don't go to the doctor very often. You know, I'm in peak physical condition.
I'm perfect.
I'm perfect, just as God made me. Shout out to my parents. Anyway, so for me, hearing PPO, HSA, I know a little bit about, and the high deductibles, all that stuff, but I'm still very new about it, and I think a lot of our users or viewers are also new to it, or they just they need a refresher on it.
Yeah. And if you guys would like, put inside the comments. I'll be happy to dive deeper into HMOs, PPOs, and high deductible plans. I'm not really the expert on it, but I am licensed.
And we can, we'll do our own research. And Chris listens to like a million podcasts a day, and he's like the research king. So we'll figure it out.
Yeah, we can figure it out. And that's something that the audience wants to learn more about. I'd be happy to. Right now, it actually is open enrollment season.
I saw that, yeah.
So, yeah. And again, if we might not be able to get that podcast out in time for open enrollment. So I would definitely recommend talking to your HR department.
Yeah.
Or just go online. There's like health benefit calculators all over the place. There's definitely different ways. But HR department's probably the best place to go for that.
Definitely.
And then when it comes back to taxes, we talked about exceptions and considerations for your tax strategy. And remember that everybody's tax strategy depends on individual circumstances, including what state you live in, because we did talk about joint property states. And then also the filing status, so single versus married filing jointly, married filing separately, or head of household. So it's always important to consult a qualified CPA with tax questions.
Definitely. We also talked about Roth versus traditional and how getting taxed before or after and how you can take advantage of that. And a little bit of the backdoor method of rolling it over.
Yeah, we'll talk more about that in a future podcast.
Definitely.
But that's just a brief that you always can contribute to a traditional with the knowledge that one day, once you reach FI, and this is what a lot of people who are in the FI movement with us, what they do is they try to control what they can control. They put as much money as they can into their pre-tax buckets, with the knowledge that they're going to retire before traditional retirement age. And in those years, while they're kind of bridging the gap between being able to turn on Social Security and actually be able to access their money because it's all in qualified funds, they're doing Roth conversions because they're no longer having that additional income.
Yep.
So they're being able to stay inside of that low marginal tax bracket. To be honest, if you do if you make no money and you have $40,000 in a traditional account, and then you convert it to a Roth, you actually have zero income tax. You have zero liability in income tax due to an IRS tax code that probably will be shored up here in the next few years. But yeah, as of right now, you can actually do it and pay zero in taxes.
What?
Yep.
You guys hear that? You guys listen? You heard that one? That's pretty sweet.
Yeah.
I want to rewind that one. Run that one back.
Yeah, and then we also talked about, like, if you have a pension or if you're expecting a pension in the future, you're going to have to look at, is it maybe worth doing a Roth instead? Because in the future, that if you take out that traditional IRA, it's going to be added to your highest marginal tax bracket, and the pension plus your Social Security is already going to put you into a higher bracket already. Again, that doesn't mean everything's going to get taxed at that, but whatever you take out of the traditional IRA will be added to the highest amount, which will likely be the 24th percentile or higher. 32nd if worse comes to worse.
Yeah. Is it time?
And then, we talked about the uncertainty of future.
Okay. Yeah. Uncertainty of future. I'm getting excited for the viewer mailbag. That's my favorite part. I'm saving my voice, saving my water. I'm getting ready for the viewer mailbag. But yeah, we'll continue.
And then we talked about the uncertainty of taxes and where they're going in the future. No one knows what the future holds.
You think they're going up?
I personally think they're going up. So I kind of push a lot of my clients more towards Roth, especially because majority of the clients I work with are in the younger demographic. But if they are high earners, we're doing traditional right now in order to lower their tax liability with the intention of eventually doing Roth conversions.
Definitely.
But again, everyone's plan's a little bit different, so it's all going to be different there. But yeah, I think taxes are going to be higher in the future. But no one has a crystal ball, so a good rule of thumb, if you don't know, is just do 50-50. Go into the traditional and the Roth and put half of your money into one, half of your money into the other. And that way you have optionality because no one knows what the future holds. You don't have to go dogmatic into one way. You can be a little bit of 50-50. Unfortunately, a lot of people think it has to be
100 on
100%.
Yeah.
So a lot of people do that with even investing, going back to our last podcast, where they're like, yeah, I have to be either 100% equities or 100% bonds.
Yeah.
And it's, no, you don't have to do that at all. You can go 80-20, 60-40. There's so many different ways. You don't have to be dogmatic on anything.
No.
And that's the beauty of it.
No, and it's better to prepare for higher taxes in the future than to be complacent about it and have them just hit you in the face when they do come.
Yeah, and the best time to start planning for your taxes in the future is now.
Yes.
If you wait till for future you to deal with it, you're going to look back at current you and be like, damn it, you got me. But it's a lot easier if you start to do it. Another big thing for Medicare and stuff is IRMA. Far beyond our discussion today, and I'll lose too many people if we get there.
Okay.
But yeah, there are future taxes that you could pay if you make too much money, which having traditional accounts would put you into higher limits, forcing you to pay for higher Medicare costs. It's messed up.
Yeah.
It's messed up.
Yeah. We got a weird system.
We do.
Yeah.
It's very complex, and I understand why people just say, I give up, I'm not going to deal with it. That's why you reach out to people like myself or other advisors who can help you out, or qualified CPAs and tax professionals or tax attorneys if need be.
Absolutely.
Are you ready to get to the viewer mailbag?
I think it's time. I think it's time for a little Five Friday feedback viewer mailbag.
And guys, if you want to get featured on Five Friday feedback, please go to FiGuys.com. On the top, there's a feedback tab. Click on that. You can write as much as you want to us. We select one a week that kind of makes sense for what we're talking about in the week. Please be as descriptive as you can. We've been getting a few that are just like, how do I do this? And
yeah, that's
be as descriptive as you can. This is obviously a podcasting for entertainment purposes, so we will keep you anonymous. But if you put more detail into it, I can give you more information. If you just say like, should I do a Roth or traditional? I'm not even going to put that question on here because I don't know anything about you, so I can't give you any advice there.
Yeah. Alrighty, with that being said, let's get into the viewer mailbag for today, for this week. Let's do it. 15,500 total income for 2023. Do I really owe 2,100 in self-employment taxes making this little? A little eye-catching. Howdy, Chris and Dom. Howdy. Howdy, Anonymous. I would love your advice on some of the challenges and experiences I've encountered on my new journey as a self-employed individual this year.
Awesome.
And I'm reaching out in the hope of gaining a better understanding of my tax situation. Cool. Came to the right place.
Yep.
Since January, I've been self-employed as an independent contractor, and it's my only source of income this year. Okay, good. To date, I've earned a total of $15,500, which includes my anticipated earnings through the end of the year. I've put my heart and soul into my one-person independent contracting business, and it's been immensely fulfilling to follow my passion. Okay. However, yeah, Chris likes that one. I like that one too. However, the financial reality has been quite different from what I initially expected. Recently, a friend of mine asked me about how my taxes worked, and I realized that I had no idea how to deal with taxes and the burden of self-employment individuals like myself.
Okay.
Yeah, we've all been there.
I was there.
We've literally all been there.
I was there.
Yep.
Yes, I was there.
Yep.
I know what this is like.
After some Googling.
Oh, good.
The mighty Google. It appears that I may be facing a 15% tax rate on my income, $2,100, even with a modest earning.
And that's $1,500, right?
15,000.
15,000.
15,000, yes. The realization has left me both puzzled and concerned. I'm not sure if I've understood this correctly, and I'm reaching out to seek clarity on why my tax burden seems so high. I mean, it is a sizable portion. Additionally, I've recently learned about a requirement for self-employed individuals to make an estimated quarterly tax payment throughout the year. Unfortunately, I wasn't aware of this obligation. As a result, I haven't been making these payments. The discovery has led to a pressing need to understand how I can rectify the situation and ensure that my financial affairs are in order. I've heard that the IRS can fine me, F-I-N-E, not fined, but they probably could too. I have heard that the IRS can fine me, and I want to make this right to fulfill my tax obligation. That's good.
Person.
Yeah, that's a good person. Do you have any guidance or support to better comprehend the tax obligation, why the tax burden seems substantial, and how I can go about making these payments? Any insights or advice you can provide would greatly be appreciated, and I'm committed to resolving these issues and ensuring that I'm in compliance with all tax regulations. My journey as a self-employed individual has been both rewarding and challenging, and I believe that with the understanding and assistance, I can navigate these fiscal complexities and continue to thrive in this self-employment adventure. Thank you for taking the time to read this letter. I hope you select this for the podcast. From an entrepreneur feeling lost in a maze, seeking clarity throughout their tax days. Very good. Very good.
Well, we did select you for the podcast.
I love it.
Congratulations.
Congratulations. Woo! Let's get into it.
No, we should definitely get into it. So there's 3 questions that were posed in this one. Mm-hmm. Number 1 is that actually correct? Do they owe $2,100, about $2,000? Do they have to make quarterly payments? Mm-hmm. And the third one is, if so, how do they do it?
Yes. So let's get into it.
Let's get into it. First things I want to say is congratulations on taking the plunge into self-employment. That is amazing. Dom and I are here right with you. We're all suffering together.
Yes.
It is.
We've literally been in your spot.
Yeah, I've been there. It's okay, and that's fine. It's totally fine. So have some fun. Another thing I always want to point out is I could really tell from the way you wrote this is that you really you're taking ownership of the problem. You realize there's a problem. You're not saying, oh, woe is me, no one taught me about taxes. You're saying, I didn't know this was a problem. Yep. I did some Googling to try to figure it out. I want to make sure I'm right, and I want to get this done correctly because I don't want to deal with any fines. And it's my obligation as a citizen of the United States, which it is. 100% is.
Yeah, a great example for everyone, really.
So people who are taking ownership of their lives. These are the kind of people I love working with.
Exactly, those extreme ownership people.
So first, let's understand. Let's focus on understanding self-employment taxes. So number 1, your first question is, do I actually owe $2,000 in tax liability? And to my estimation, yes, you do. You probably owe a little bit more than $2,000, probably around $2,200 to $2,300. So $2,200, $2,300. Majority of what that is FICA. So when you're a W-2, so for people who have a W-2 job, when they're an employee, they typically pay 7.65% of your income goes to FICA, which is Social Security and Medicare costs. Their employer will also put 6.75 into Social Security and Medicare, and their employer is actually holding that from the check. So before they even get the money, it's already being withdrawn from them so they don't end up getting messed up. Yeah. And then they're actually doing that over 24 paychecks, 26 paychecks, 52 paychecks, depending on how you're being paid. So your employer plus the employee yourself are putting about 15.3% is being sent to the government for FICA, Social Security and Medicare contributions. They're also, just to make sure that you're aware, they're also withholding your state and federal taxes. And you can kind of control that through the year by going in and changing the tax election as to how much to withhold. But when you're a self-employed person like you are and like we are, your income is still subject to the same federal, state, local, and FICA taxes, but there's no regular paychecks that the government is aware of to take money from. Yeah. So it's really on us to have to be in control of this and making sure that we're doing it. So this is the hard part, Dom, is, I understand where they're coming from, saying, well, I only made $15,000. It's not really fair that I'm going, I didn't make a lot of money, but I feel like I'm paying a lot of money in taxes. $15,000 isn't a lot to make, but $2,000 is a lot to pay. Yep. For that much. Yeah, no, I 100% get it. But remember that all of that, there's nothing you can do to hide from FICA. No. FICA, that's your Social Security, Medicare. It hits everyone. You can't go into HSAs, you can't put it into traditional, you can't do anything like that. Whatever you make, you have to pay for that. But the good news is, in the future, you're going to be eligible for Social Security and Medicare, given that you fulfill your 40 quarters or 10 years of contributing into that. So it is a good thing. You want to be putting the max amount into that system because in the future, it's going to pay out more, ideally. Yeah. Given that it's still around. And that's a different discussion. Yeah, that's where there are a lot of sub-conversations we can have. Yeah. So my guess is that what you Googled is correct and you probably will pay that. Just remember that you don't have the regular withholding. So typically, had you made $15,000 originally, you wouldn't have brought in $15,000. It would have already been withheld. Quick note for self-employed people, though, you actually have the ability to write off the half of the money that is from the employer side that's going to FICA, so that you don't have to pay that in your income.
Could you explain that a little bit?
Yeah, for sure. So you can take a adjustment on your taxes for the employer half of the FICA tax income. So you still have to pay that entirely, but whatever the employer side had to pay, you actually get to deduct from your federal and state taxes. Does that make sense?
Yeah.
It's kind of a hard way to explain.
It's a little bit difficult. But
You try reading the IRS code and it's difficult.
Yeah, hopefully with the introduction of ChatGPT, I'd just be like, can you just like summarize this?
Yeah,
Explain
can you
this to
just
me?
tell me what this means?
Yeah.
Yeah. So depending on how much you paid through the year and how much I know when you're starting a business, there's always a bunch of upfront costs and you're paying for things, supplies, maybe you have an office,
website creation,
miles on your car, LLC formation, all that stuff. If you only made $15,500, if you have $3,000 in expenses anywhere for your business, I'm going to assume that you're going to have zero tax liability at all, federally or state. But you still have to pay the 15% FICA. Because remember, it would normally be 7.5 from you and 7.5 from your employer, but now you're both the employee and the employer, so you're paying all 15% yourself.
Yeah.
Now let's get to question number 2 that you asked. What about making quarterly payments? So making estimated quarterly payments is how you keep from owing a large amount at one time. So essentially, you figure out what you think you're going to owe for the year, and you divide that up by 4. So you should pay 1/4 in April, 1/4 in June, 1/4 in September, and 1/4 in December or January. So instead of having to come up with, say, $2,000 at one time in January, you'll pay $5,000 or $500 4 times a year. And yes, the federal government, if you make over $10,000, they want you to make that quarterly, or there can be a fine. The good news for you is, since you didn't make a lot of money, I'm going to assume that your fee is probably going to be like $20, if there is a fee at all. So I'll get to that more in a second. So
I think it's really interesting though. So basically, how do they mind how much you're sending? Because like, let's say I'm not really sure like how much I make each quarter, and how to calculate that. Does it matter if you send them how accurate does it have to be?
Dude, that's such a hard question.
That's tough because like at the end of the year, you're putting all your numbers into with your accountant or a software or something like that to really like get the true number. So it's like it's kind of a weird system, you know?
Let me give you a good rule of thumb.
Okay, cool.
So good rule of thumb is to set aside, on average, if you're earning more, about 28% or so from every job or payment you get, and put that into a high yield savings account and start making those quarterly payments. For my money, for that I have to pay for taxes, I actually put into my brokerage account and put into a money market account that's currently yielding 4.5%. So the money that I'm going to be paying in taxes, I'm making money on, knowing that it's going to have to go to Uncle Sam eventually.
So I'm just going to simplify that for the viewers. So from every dollar you make, we'll say every $100 you make, 28% of that,
$28.
or $28, you take out of your profit and you put it in an account for later, for tax time, or quarterly taxes, or whatever. And you put that in a money market account, or a high yield savings, basically the same thing. And while the money is in there, it's growing 5, 4.5, whatever the percentage is on it. So your money that is in your tax account that you're saving for later, it's no different than a savings account, just with a higher interest. It is growing. So when tax time comes, it's not like, because I think everybody's been there where it's like, you've been hit with tax, you're like, why do I have to pay $1,000 in taxes? Where am I going to have this from?
Yeah, that's not fair.
It's not fair, it sucks. But it's your fault. So you got to take ownership, extreme ownership of it. And that's okay. Set some money aside. Chris does 28% because of his tax bracket. You can put whatever you want, but better to have more than less.
It is. And that's the reason that I put a higher amount. And I also want to make sure that you put it in a place that you will not have the
quick access
to, because you don't want to spend that money, because that money is not yours. It will go to Uncle Sam. And unfortunately, I've had a lot of people who come to me and they are like, I made all this money and now apparently I owe taxes. It's like, well, where'd you put that money? And it's like, well, I spent it.
Yeah, think about it this way. If you had to pay the mafia every week or every quarter, right, taxes, and you put it in an account, you wouldn't touch that money, right? You wouldn't touch that money because they're going to come and break your legs, right? Think of it the same way. the government can come and take control over a big aspect of your life.
Yeah, they'll garnish your wages.
They'll garnish your wages. They'll talk to your employer. It's credit score. It's just not good. Always just be in order with those people.
Yeah, exactly. You're exactly right. And then to our viewer, so for your 15,000, I would not be saving 28%. That's for my tax bracket. So for you, I'd probably be saving like 18 to 20% moving forward. And then depending on the state that you're in as well is going to also do that. For the 28%, that's just kind of a blanket over all states. And we're here in Arizona, we have lower taxes, but I still do that because the money's going into a money market account anyways, it's growing. So at least it's being invested. Either way, it's being invested. And then I use it as an emergency savings if I need to have that as well. But everyone's a little bit different how they want to run that.
So is that for your state and federal?
What?
The money? Do you?
The 28,000 is for my state, federal, FICA. All of it, I put into one account. I don't.
You don't divvy it up or anything like that. Right?
No,
doesn't make sense.
It's going to make it complex, and there's no reason.
No, simplicity is the key.
Yep.
What you have a quote for simplicity, don't you?
Simplicity is the key to progress.
I like it. I like it. Yeah,
and then complexity is the enemy of progress.
Yeah, there you go. Yep. There you go. I like that. Put that on a shirt.
Yeah,
I like that.
And then remember, because you're just starting out, you made 15,000 this year. You're going to be making more next year. You know, from guys who started their own company, it takes time to build up. And once you hit that critical mass, it becomes like a flywheel where you're just like boom, 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 winning and winning, winning. So as you do that, you're going to have to adjust how much you're saving. So right now you might be saving 18%. Eventually you're going to have to get up to 28%. Shoot, if you get up into a higher tax bracket, you might be having to save like 32%. I don't know.
Yeah. I
save 28. I find that works for me, but everyone's a little bit different on what they do. That's something that me and my CPA worked out for ourselves.
Definitely.
And then let's see here. The third question you asked was, how do I actually pay the fees? Well, I have good news. It's actually really easy. Most government sites are god awful.
They're so bad.
But the IRS's website for making payments is actually really easy because the government wants your money, so they're going to make that easy for you.
Yeah, of course.
So what you're going to have to do is, we'll put this, you just write it down. You're going to go to irs.gov/payments. That's irs.gov/payments. You're going to click that you want to make a payment. And then there's going to be a drop-down bar that's going to ask you what payment do you want to make. You can make back taxes for the previous year. The one that you want to select is estimated payments. If you click estimated payments, in this year it'll say, do you want to pay estimated payments for 2023? You'll click yes. After that, you'll put in your name, social security number, your address, if your business has, and then if you have a S Corp or an LLC, if you want to put in your business tax ID number, you can. You don't have to though, because both of those are pass-through entities, so they go to your taxes anyways. Then you can either go with a credit card or a bank transfer. If you use a credit card or a debit card, there is a fee. I think it's like 2%. If you do a bank transfer, then it's going to be exactly what it is. Mm-hmm. So for you, what I would recommend, and the website again is super easy. Go inside there and try to make that $2,000 or $2,200, $2,300 payment before December or January of next year in order to, if there is a fee, and I don't know if there's going to be a fee or not, in order to lower that amount. But again, the fee, if there is, based off your income, is only going to be like $20.
Yeah,
I think.
And what if I overpay?
What if you overpay?
What if I overpay them?
The nice thing is the government will say, well, thank you, Dom, for your overpayment. And then when you
we built a road in your honor.
We built a road in your honor.
I want statues. I want roads. I want planes in my
Where's
my monument? I overpaid $20. Give me more statues.
Yeah. So, but at the end of the year, when you file your taxes, they will send you back the money saying, hey, you overpaid us. Here it is. But the sad part is...
They put it in a money market account or something?
No,
they get a little interest on that?
They just get it back. And that's what a lot of people think. They're like, oh yeah, I got a tax return this year. Yes, I did good. That doesn't mean you did good. It means you made basically a 0% loan to the government for a year or 6 months. But here's the messed up part, is that if they give you money back, that's just like, okay, here, you overpaid us. But just like I talked to you about, if you don't pay them soon enough, you have to pay them a fee too.
That's dumb.
So it only works one direction.
That's so dumb.
But they're also in charge, so it is what it is. You play the rules.
I don't know. We put them in charge.
Yeah, it is true. You play the rules that you can, but yeah, that's the way that works. Any other questions on that?
No, I think that's solid. I just wanted to poke the bear a little bit. I know we talked about it before.
I know, it pisses me off.
It's so dumb. It's really dumb. Like, You could put it in a money market account. You know this, right?
You know, I watched a TikTok recently.
You watched a TikTok?
Well, not TikTok. It was on Facebook.
Oh, I'm just giving you business. You don't watch TikTok.
I don't have TikTok.
You didn't even have to.
But it was on YouTube. It was a YouTube short.
Yeah.
I was posting a short and it came up. But it's this young guy and he's basically pretending to be like he doesn't know what he's doing. So he's calling the IRS.
Yeah.
And he's like, "Excuse me, ma'am. I'm recently out of college. I don't know what I'm doing with my taxes. Can you just tell me what I owe you and I will just gladly pay it?" And then the IRS agent goes, "No, sir, you have to figure that out yourself." And then he goes, "Well, I don't know what I'm doing, so if I get it wrong, is that okay?" And she goes, "No, sir, if you get it wrong, we will fine you for doing so." And he goes, "Okay, well, I don't know what I'm doing, so can you just tell me, so do you know how much I owe?" And then the IRS lady goes, "Oh, yes, sir, we know exactly what you owe." And then he goes, "So I just have to figure it out." He goes, "Yes, sir, figure it out. Good luck." And then hangs up the phone.
That's ridiculous. Yeah. God.
But we have a very complex tax system, and even the IRS doesn't really know because there are so many different deductions and ways that you can lower your tax liability if you know how to do that. So I would certainly recommend to our listener and to anyone else who owns a business or might have some complex tax advice, if you can't just do it through TurboTax, if you don't have just like the normal straightforward, I own a house, I have an investment account, if you start having like rental properties and stuff like that, go and find a qualified CPA in your area, in your state. For our listener, I would find someone who works with individuals and independent contractors like yourself. And then final thoughts is congrats again on starting your own business. Stick with it. It takes time to grow. Dom and I know exactly what you're going through right now. I know it's tough, but I can see that you say that's really rewarding, and that is amazing. So we are sending you best wishes from Arizona, and keep up the great work.
Yeah. With that being said, it's win of the week time.
Win of the week.
It's my second favorite time.
It's your second favorite time of the week.
It might be my first favorite when we get to it because I might have forgotten about it. Once we, viewer mailbag. I love talking with the community, seeing their stories. I love that. But win of the week.
We can talk about ourselves, our favorite people.
Yeah.
I love me.
Exactly. We're still waiting on that monument.
Yeah. So I'll go first this time. You went first last time. So at the beginning of last pod, we kind of were touching upon making cold plunges and what a cold plunge is and all this stuff. And I'm happy to say that my Jimmy Rig cold plunge holds water and it is working. So I got a deep freezer from my aunt when they moved from their house. And it's a smaller deep freezer, and I've always wanted to have a cold plunge. But if you look at how much a cold plunge costs, they cost like $10,000 to like get
They're expensive. Yeah,
like a good cold plunge.
And especially, it's like we live in a place where 6 months out of the year it's 120, and oftentimes it doesn't get below 100 degrees even at night.
Yep.
So hot ice and don't mix.
A lot of work. So I decided since my aunt gave me her deep freezer, I was like, well, what if I just convert this deep freezer into a cold plunge? So I got on YouTube and I started going down the rabbit hole of how to do it. So I had some Flex Seal. I Flex Seal all of the
like the
grooves and the bevels and everything like that. It holds water. I got a Rainbird system in order to know when to turn on and off the deep freezer to keep it I'm going with 42 degrees. It is a small deep freezer, so I am very tight inside there.
Yep.
So I might upgrade at some point, but right now what I'm really trying to do is make sure that I establish the habit, make sure that it's something that I'm going to keep up consistently before I start really dropping money on either getting a bigger deep freezer or actually buying like a real cold plunge, which costs like $10,000.
Which
I probably wouldn't.
Yeah. Because it's like if something works, it works. There's no need to go to the next level.
Yeah, but I'm literally, and for those who are just listening on the pod, like my shoulders, like I end up like
it's small.
It's very small.
It's small. Like I hope you have like slim hips because like I can see you just
my shoulders are bigger than my hips, so it's like I have to just like
I think my shoulders are probably wider, but I got some wide hips.
My hips are normal, but my shoulders are
my hips are normal. I got them wide hips.
They're dancer hips.
Yeah, I got the wide body load.
But yeah, so that's going on right now. So I'm happy to continue to talk about how the cold plunge journey is going as we continue on. But as of right now, there's water in it. It is cooling. I got in it this morning. It wasn't super cold, but it is getting there.
Okay, cool. Well, that's exciting.
Yeah.
That's good. I'm excited.
It's in my garage, so I'm gonna, just like Atomic Habits, I'm gonna attach it to
Another habit.
To another habit.
You gotta habit stack it.
The habit I already have is I walk my dogs every morning or take them on a bike ride, so I'm gonna attach it to that habit. Before I can do that, I have to go inside the cold plunge.
Yeah. I feel like I love habit stacking. It's so efficient. I do it sometimes subconsciously.
Good.
So like when I'm having dinner with like my mom or so, she'll drink water and I'll drink water. And sometimes it's like, why are you copying me? It's like, no. I see you do it, so it triggers me mentally to do it. It's just like now I
Atomic Habits again to you.
Exactly. Now I gotta take a sip of water.
And Dom, what is your win of the week?
So a couple weeks back, there was this air fryer extravaganza product that I saw at Costco. I thought it was the bee's knees. I was down. It's an air fryer. It's a griddle.
Cool.
And it's what's it? Air fryer, griddle, something else. It was like a 3 thing in one. It was really cool. Like a stove or something like that. And I really liked it. Like you cook steaks in it. It has like a prong thing in it, a temperature prong.
Is it a Ninja thing or who?
I thought it was a Ninja. It's not a Ninja.
Oh, cool.
It's not a Ninja. Explains the price tag. So originally it was $100, and I'm like, this is great because I know how much the dual air fryers they're pricey.
Yeah.
They're spendy. And I was like, dude, I want to get this for like when I move out. I'm like, this is gonna be amazing. I waited a week. It went down $10. I'm like, dude, this is great. I was on Costco website literally the other day. They were having some kind of sale. This thing was another $30 off.
Dude.
I got it for like $60.
Nice.
So I'm so stoked. And you know what's cool? Sometimes in the air fryer, I'll forget to like flip my chicken. It has a flip timer.
Well, it'll do
A flip prompt.
It'll tell you.
Yeah, like flip, time to flip.
I thought you had like a thing inside.
Yeah, that'd be kind of cool. The next iteration, but it's really cool. It has like a glass lid on it and everything, so you can like see it and everything. It's cool.
That's awesome, man.
It's cool. I'm excited.
So you got some big savings. At Costco.
I got some chonky savings. You got some savings, didn't you?
Well, I didn't get some savings. My wife's got some savings.
Shout out to Chris's.
Shout out to my wife. So I'm gonna reach out a frame over here and grab this receipt here.
The CVS.
Yeah, the CVS style receipt. For those of you not listening on or just listening on the pod.
Yeah, I got you this side.
This is longer than my arm. This receipt. It is from Bath and Body Works. My wife purchased 21 lotions.
Nice.
But here at the bottom, I guess Bath and Body Works is running a promotion. So
it's justified.
It's justified.
It's justified.
Hashtag girl math.
Don't start with me again.
But actually,
get us in trouble.
to be honest, my wife came home. She was super excited. She came home with like 3 bags of Bath and Body Works. But I'm looking here. Her total amount was $99.80, but her total discount was $261.63. From what she was telling me, apparently the things that she buys, her lotions or whatever, are typically $18 or $20 a lotion. She got them for $4 a lotion, and then she was also able to stack a 25% coupon in there. So this is the first time I've ever seen the total discount actually be lower than the total.
I've done that too before.
Yeah. So my wife, I guess, is now getting into extreme couponing.
Nice.
So we're gonna reach FI.
I love it.
We're there. We made it.
We're there.
We're there.
And she got some ice cream too.
Yeah, she got 4 things of Haagen-Dazs. She told us when we walked into the pod.
Yo, she's like, I love her. Chris's wife is great. She's the biggest smile. She's like so funny. She's like, oh, also I was at the store, got some Haagen-Dazs. It was like 2 for 1. It was a 2 for 1.
I don't know.
Buy one get one. And Chris is like, oh, cool. And she's like, yeah. So I got 4. And Chris is like, what the? Why do we need 4 Haagen-Dazs? Chris doesn't eat ice cream on the weekend or the
weekdays. Yeah.
Weekdays. So it's like, those ice creams are for her. Like
100%.
She's tearing through those.
Yeah, she got one for me probably.
Yeah, maybe. It would take you a while to eat that.
I don't know. During the weekend, I'll just go hard. Sit in my cold plunge and eat my ice cream.
Oh, that's a gnarly way to do it. Eating cold food while in the cold plunge.
Yeah, it's because it's like a double negative, so it makes it positive.
Oh God, listening to cold music.
So guys, thank you so much for joining us on 5 Friday Feedback. Please like, subscribe, and tune in next week. We're actually going to be talking about something kind of cool after the last listener mailbag where we were talking about the death of someone's wife. I decided we need to add an insurance piece in there.
Yes.
So we're going to be talking about that next time. Remember the fee for the show. Not going to ask for any credit cards, but if you found value today or you thought we were funny in any way, shape, or form, please tell a friend about the Fi Guys. Exactly. And with that, hope you have a great weekend. Later.
Peace.
This video podcast is sponsored by Monzon Wealth. The content in this podcast is for informational purposes only and should not be considered financial advice. We do not endorse specific products or services. Past performance does not guarantee future results. The opinions expressed are those of the hosts and guests, not the podcast sponsor.
It is crucial to consult with a qualified financial advisor or professional who can provide advice tailored to your specific needs before making any financial decisions, investments, or taking any other actions. If you are seeking specified help, you can reach out to Chris at monzonwealth.com.